Hi, my name is Nathan Thornberry. I'm with the Thornberry Group out of Carmel, Indiana, and I am going to prove to you in a record short amount of time that cryptocurrency is a total scam, that it's worth nothing, and that it should be, in fact, illegal, and that even if you are not one of the idiots participating in it, that it's in fact harming you. So let's start with the basis for this first, which is, how do we know for certain that cryptocurrency is in fact a scam? Well, there's four basic reasons. The first one is that no one's established an actual value for it. As far as we're concerned, the value is $0 or less, and it's near impossible to spend, which kind of backs up that position, right? Like, here's this thing that's worth a lot of money. Okay, where do I spend it? Nowhere. Go to this exchange. Go talk to my friend Sam Bankman-Fried. He'll get you set up with a crypto exchange, instead of like a real actual legitimate bank or something like that, which should have also been an indication that it's a scam. But whatever. So you can't spend it, you can't deposit it in a bank. You have to deal with con artists on your way in and on your way out. That's a problem for me. Number two, the new use of words or new phrases, and this is common to a lot of scams out there. They'll start coming up with their own verbiage to describe things that put you in a position of thinking about the words rather than thinking about, why am I even listening to this? Why would I buy fake currency that my computer made? Duh. Well, because they tricked you. They said, oh, we wrote a white paper with technical details defining how this, Bitcoin is limited to $1 billion or whatever, which is all nonsense. And then they defined a process for making it, because, it creates the air of legitimacy where there is none, and a total vacuum of value and legitimacy by calling the process by which you make these cryptocurrencies mining. Well, what does that do to the average, listener of these messages? They go, oh, mining. Yes, mining. That's, good old working there. That's getting into the coal mines, and, you have your axe and your pick and whatever, and you come out looking like Derek Zoolander. That's not what these guys are doing, okay? Mining, in this case, is setting up a computer, turning it on to burn a lot of energy, we'll get into, and come up with a number that is some unique number for this fake currency, to give it to impersonate something that is real, that is legitimate, which it's not. They also use words like fiat currency and decentralization, because remember, the crypto con artist, they have to convince you to part with your actual assets, whether it's a boat, a car, a house, stocks, or good old American or whatever country you're from money. They have to get you to take this and say, I don't want that. Instead, I want this fake currency. So how do you make this thing, the United States, the strongest economy in the world, with currency that is such in high demand that people from all over the world participate in our markets and buy this currency? How do you make it so that idiots part with their money in favor of something worth nothing? Well, it's real simple. Make them scared of this by using phrases like fiat currency, which didn't exist until, or didn't exist in common vernacular, at least, until somebody in the crypto con artistry game came up with this marketing ploy and said, oh, you don't want to be centralized. Those people can screw it up. Every country, even your well-developed countries with lots of checks and balances and systems that protect you and protect the consumer and protect their finances, all of those systems suck, and your country's going to be East Germany. No, it's not real. If you're in a third world country and you don't have a currency that you can rely on, or you think that it's going the way of East Germany, I invite you to find a computer with the internet and use modern banking technology to buy in the markets in the U.S. or Canada or Britain or Europe or even China. I mean, why not? Japan, certainly. They all have economies that work in systems that guard against the kind of things that are happening right in front of our eyes in crypto, in these crypto scams. You know, you can't look at this Sam Bankman-Fried, potential 125-year sentence and go, yeah, this happened in a well-regulated industry that's safe and is a good investment. No, it happened in the vacuum of safety. And so, they use these long circular explanations to get their point across, because they can't actually convince you that this stuff that's worthless is worth anything. So, if you actually sit in one of these seminars they do, or you listen to somebody who's trying to sell you on cryptocurrency, or you read anything on the internet, just have your antenna up, because what you're going to find is that they're actually saying nothing, and they're just using keywords the whole time. It's fascinating. It's good marketing, but those guys should be marketing something else that has actual value. It'd be good for the world. The number four reason we know that this is a scam is because of the actual results and the news that comes from it. So look at this chart. We're going to come back to this chart. But this isn't how things that have inherent value track. They don't go from 9 cents to 1,238, back down to $30, up to 2,000, up to 20,000, down to 10,000, then back up to nearly 70,000, and then back down to 17,000, and then back up to 35. No, that is not how things that are legitimate or valuable happen. This chart is not a chart, my friends, for the value of cryptocurrency. All cryptocurrency is worth nothing. So this isn't a value chart of cryptocurrency. This is a chart of how many idiots bought that day as a result of good crypto marketing. That's it. So here's a slump, buy it up, crypto marketing push, crypto marketing craziness, another slump. That's how it works. And the people actually making money in these things are the most despicable type of investors, by the way. They are solely making money off of the disintegration of money for others. And that's not fair. That's not the way the game is supposed to be played. It violates every tenet of every legitimate investing, currency, trading, and even gambling regulation. What's the difference between this and a roulette wheel? Well, in the roulette wheel, you might win. In this one, everybody loses because it's worth $0 to begin with. So at the end of the day, this will be realized at some point. And then everybody that put money into it all along the way, all of that money essentially became valueless. So before we go into the proof on all four of these, we need to define currency, because the cryptocurrency marketing machine has been pretty good at confusing you about currency. So let's talk about that for a second. I put up a very simple equation here. Everything of ours, and when I say ours, I mean whatever country you're in. I happen to be in the United States, and we have a lot of assets in this country that are our assets. And what makes something our asset? Part of the good old United States of America. This $20 bill is one of our assets. Yes, this belongs to our government. It currently belongs to me because I'm using it as a note to do exactly what it says to do. It says it's a note that is legal tender for all debts, public and private. So I might use it to pay for my lunch or tip somebody or whatever. But it's real currency. It's currency defined by my country that is using that currency to create a monetized version of everything that is us and ours. So let me give you an example of something that's ours. If you drive on a highway or an interstate or cross through an intersection with a street light, all of these things are government-owned property with government-improved assets on them that deliver economic value, right? So if you look at an interstate and you see a bunch of cars driving down, what are they doing? They're burning gas. They're creating the need for another new car eventually. They have maintenance expenses, and they're probably on their way somewhere to participate in an active economic situation, right? Maybe they're going on vacation, maybe they're on their way to work, maybe they're on their way to the store to buy something. Whatever it is, the streets, the infrastructure, the national parks, the municipal buildings, all of this contributes to, kind of hard assets. But then there's another asset that is all of ours. And by the way, when I say government owned, I mean owned by you and me. But everything else, everything leads to taxes, right? So anything that can supply a tax base is also an asset of yours and mine. And that asset gets calculated into the currency of a country that backs up that asset. So you can have the United States looking after your money, which they do a really good job of, or, and a lot of other countries do an okay job too. We just happen to be the best at it. Or you can take your hard-earned money and buy something fake and have Sam Bankman-Fried or someone else like him, because they're all the same, look after your money for you. He's going to jail for wire fraud, prison actually. But there's a lot of people in this business that belong in prison. By the time you get done with this video, you'll agree with me. So there's your currency defined. And everything I just said about real currency, legitimate currency that is backed by a country and supported by those underlying assets of that country and tax base, etc. None of it you can say for crypto. Crypto isn't created based on some economic value. It's created and then sold to an idiot for a dollar value that is well beyond its original dollar value of zero. So what kind of economic output was created? What economic benefit was there? Well, none. And in fact, there were a lot of detriments. So we're going to skip to now mining and what it takes to become a miner in cryptocurrency. So the first thing that you need to do is buy some equipment for 10 to 15 grand. Then you got to know how to operate all that stuff. It's not super simple, by the way. These are technical people. These are people that know what they're doing. And then you got to use, hopefully, the dirtiest, cheapest energy you can, because it takes thousands of kilowatt hours to mine these Bitcoins. And then you got to sell it to some fool. Now, in case you missed it, what's really happening there, you might say, well, gosh, Nathan, I'm all for protecting consumers. You might be a walking Dodd-Frank bill. But this is crazy. And that's causing harm. But even if you say, well, those people knew what they were getting into, they deserve to lose the money. They deserve to feel suicidal or actually be suicidal. But for you and I, because I don't buy this shit, I'm sure you don't either. But if you do, or even if you don't, when a crypto miner goes out and buys all this equipment, this technical equipment, and processors, microprocessors, and they use it for this stuff that has zero economic value, all they're doing is increasing the price of this equipment for other purposes and causing supply chain issues, potentially, but definitely increasing the cost for legitimate businesses and inflating what everyone has to pay for everything. So cryptocurrency, you're a part of the inflation problem. And that's why we're having to get this all under control, is you. So in addition to that, we take people that would be productive parts of our economy and provide more in this everything that is ours. And we're taking those smart people and we're putting them into an absolutely worthless position of negative ROI. Well, that also causes inflation. Indirectly, but it does. And then you have this dirty energy, which, I'm from Indiana. It's not like, we're not exactly liberal here. It's not like I'm best friends with Al Gore and we protect the economy first, before all humans. None of that. Okay, I'm not on that side of things. I'm pretty well in the middle, but I'm not in the middle when it comes to this energy side, because if one of these miners is in your neighborhood and they're using that energy at a much higher level than even, a grow farm for like pot, which isn't necessary, by the way. All you have to do is reach out to the good folks at bluemoonhemp.com. They'll set you up with THC, deltas, whatever you need. You don't have to grow your stuff. But definitely don't use the energy in your neighborhood to build, to mine these Bitcoins. Because what you're doing is you're inflating the energy cost for everybody. Those power plants can only provide so much power. They have limits. And that's why brownouts happen when infrastructure isn't set up correctly. The wires that come to your neighborhood are set up for only so much power. And so that's a problem, but it really, here we have really good infrastructure in America. So we can afford an extra bump of 20, 30% in energy consumption. The problem becomes that it just increases our cost of energy with no economic output. So when that happens, it means that we have a higher cost of living compared to what the value is in our country, and currency gets devalued. It inflates. So this is part of it, and crypto's a part of it. So, but that's a problem for us. Let's take a worldview for a moment, and let's assume that what's good for all humans is good for you and I, and to a large extent that's true. So if you're in a third world country or in a developing area of China and you decide that you want to open up a mining company for this cryptocurrency, what are you doing? You're taking advantage of usually very cheap, very dirty energy that's meant for the people that are there, and it's a temporary measure so that the people there can develop out of that. They will no longer be in the developing world at some point once they've gotten up to our level, so to speak. Well, that becomes incredibly difficult when you have somebody sucking off of their grid, causing brownouts, making the energy delivery more expensive for them. So this is a huge problem for the world. And then that fool that buys their worthless coin at that point at today's price of about $35,000, well, what did they get? They got a number. That's it. It doesn't have any value. So let's look at that and go, okay, we don't like inflation. We don't like being hit with higher energy costs, which crypto is is making happen. But let's go to another part of this. Let's go to the actual consequences beyond, oh, these people lost some money, but they deserved it. My energy cost is a little higher. Let the kids have fun. Okay. I'm sure you don't feel that way, but I'm just assuming you do for a moment. Or let's say hypothetically that you do. Do you care about human lives? Because it's my position that every lawmaker should be working their asses off right now, ensuring that cryptocurrency is completely unlawful. Because it's very likely killing a lot of people. And I mean actually killing them, taking them down a dark path and resulting in suicide. Let me tell you how I get there. I don't personally know anyone that has committed suicide as a result of cryptocurrency going down like this. But let's look at this chart for a minute and go, all right, from $123 to $1,238 and then back down to 30. That's a lot more than kind of the worst times that we've had in our economy. You can go back to the Great Depression. You can go to every Black Monday or Friday or whatever. No, Black Monday. You can go to Black Monday and not see this kind of dip in the prices of the entire economy, right? But people get invested in this crypto stuff, and they get sold on the idea that it's decentralized and it's not that fiat currency, and I'm involved in a real thing, and they go, okay, I can invest some serious coin in this, and then they lose big time. In the world today, in our world, we'll just use United States as an example. There's probably 10 million traders that trade at the very riskiest side of options and penny stocks and over-the-counter stuff, and and straight up startups and just crapshoots, gambling, if you will. But even those guys don't see this, because they can diversify over quite a few things, and they know that the game is they lose on so many and they win on so many. But when the market takes a shit and it goes down by 10%, the number of suicides in this country goes up a lot. Every single year, on average, in this country, about 680 to 690 traders commit suicide. And they commit suicide because of falls in the market that are a fraction of the falls being created here. And that's maybe 10 million of them. It might even be closer to 5 million. There's 45 million Americans that have been suckered into this. And it's horseshit, and it should be stopped. And you should talk to your senator. You should talk to your House of Representatives member. Send them this video. Let them talk to me, and you could even fast forward them to right at this moment where we review the consequences of cryptocurrency and all of these con artists and scammers. The number one consequence is very direct. It's the energy consumption. It's driving up energy rates for regular families, driving up energy rates in parts of the world that desperately need it to develop and become a bigger part of our economy and deliver another partner for us as a country in export and imports and contribute to everything of ours, because everything of ours in the world contributes to everything of ours as our country here in the US and your country wherever you are. That's one problem, and of course then there's the indirect things like the pollution that comes from it and whatnot. But then there's the unproductive citizens and equipment that is going into this and not contributing to our society in any real way. And when they do that, they're contributing to inflation. If you're in the US and you're a lawmaker and you're tired of seeing the Fed run the only game in town to try to counteract inflation, don't worry, you have a lever too. Just get rid of the valueless, and you will have done your part in taming too much inflation. We always want some inflation, but it was too much for a minute there, and it's going to continue to be too much so long as we allow these kind of crimes to continue. Number three, and this one's the real one. This is the reason why it's worthwhile for you, whoever you are that might be in this decision-making capacity, to make this illegal. And that would be the financial hardships created by these dips. They're extreme. They're evidence of a scam. It is a con. It has been from the beginning. And this is causing major financial hardships for actual workers in the world, and of course here in America, that money was for their kids' college fund, and instead it went to a crypto con artist. And that's horrible, but it probably also resulted in something we can't really track because we don't track this stuff. But there was probably 1,000 suicides over this period of time, maybe less, just on this issue alone. And I'd be surprised if there weren't, just based on the numbers from something that has a fraction of the loss and a fraction of the participants having over 600 certainly, but in some years more than 700 suicides. It makes sense. So hopefully, if you were thinking about getting into crypto, maybe I made you think twice and you won't waste your family's hard-earned money on that. If you're already in it, sell now. Don't wait. There's no sunnier day ahead. Maybe it ramps up like this again, and maybe you sell and you get super lucky. But from then on, you can know that your luck was at the expense of someone else in the most purest of ways, because somebody else had to lose for that. And if you care about your country and you care about the world and you care about your financial status and you want good economics, then you don't want any of this stuff to happen, because it's taking away from everything of ours and our country. So I will leave you with something, because I basically told you what not to do in this video, and we'll have plenty of opportunities to talk about healthy inflation, what to do. But I'll give you a real simple way to avoid this and not play these games And I'm saying this as a sophisticated investor. If you just go to the Dow Jones Industrials, take those 30 companies, lay them out on a table, and pick your favorite 20. Make them your favorite 20 because they're good businesses, that you agree with their business practices, that you think they have a future, or their technology is awesome, or maybe it's something that you enjoy yourself, and you know that people will generally enjoy it like you do. Whatever the case may be, boil it down to about 20 of them. Make sure at least half of them are delivering great dividends, as much of the Dow does. And then look deep at the financials and figure out who is at a peak, at a high, and who's at a low. Because you want to still buy low and sell high, but you don't want to buy at the very height of the market if you can avoid it. I know it's kind of an arbitrary thing to say, and it's hard to get there. But if the price to earnings ratio, which is basically on the card for all of these companies, if you just look it up on your phone or any financial site, you're going to be able to see which ones are overpriced compared to the rest of the participants in their industry, and which ones are clearly underpriced. And then there's a bunch in the middle, and those ones, make your own decisions, or get a qualified financial advisor. There's a good idea. And if you find a financial advisor that suggests to you that you get involved in anything to do with crypto, fire them immediately. Don't even talk to them. And in fact, I would probably report them to a state agency, because they have violated the trust that you placed in them. That's all I got for you for now. Nathan Thornberry here. Visit us at thornberrygroup.com.